Hey everyone, welcome back to Corporate Decoder, the place where we decode the business world. Today we're diving into a report from Eureka Acquisition Corp, and let's just say their journey to find a business partner is like searching for a needle in a haystack, but with a ticking clock. Will they find someone, or will the whole thing just vanish? Before we get started, if you like getting clear and simple explanations of complex business documents, make sure to subscribe. We also have a Discord community linked in the description below. Come join the discussion. This is their Form 10Q, which is basically a quarterly checkup. It gives us a snapshot of how they were doing at the end of March of 2025. Basically, they're a blank check company, meaning they exist to find another company to merge with. Think of it like a dating app, but for businesses. If they can't find a match, they have to return the money to investors. Let's get straight into it. First, let's take a look at their balance sheet, which shows what they own and what they owe. We are looking at a snapshot from March 31, 2025, and also comparing with September 30, 2024. Looking at the total current assets, which is what they have on hand to pay short-term debts. As of March of $22,000 back in September of $22,000, back in September of 2024, they had about $34,000. So in just 6 months, they spent close to $300,000. That's pretty significant. This is where the bulk of their money is. As of March of 2025, they have roughly $59, and 2024 it was roughly $58 to $1 million. Not bad considering how their cash on hand dropped a lot. Under liabilities, we see accounts payable and accrued expenses, which is short-term debts they have to pay soon. In March of 2025, it's roughly $77,000, while back in September, it was only $40,000. This company's short-term debts almost doubled. That is not a good sign. Their total shareholders' equity, which is how much the company is actually worth if you subtract all the debts, stands at roughly $1.1 million in March of 2025. September of 2024 shows $2,009 million. This means their value to shareholders dropped by a staggering $1.8 million in just 6 months. Warren Buffett would be shaking his head at these numbers. Now let's move on to the income statements, which shows how the company performed financially over a period of time. Let's compare the 3 and 6 month periods. The first thing we see is general and administrative expenses, which is how much money they are spending on running the company. For the 3 months ended March of 2025, that number is around $187,000. For the 3 months ended March of 2024, it was a much lower $27,000. For the 6 months, the number is roughly $39,000 versus $84,000 the year before. This company's expenses shot through the roof. Interest earned on investments held in trust accounts shows their earnings. For the 3 months ended March of 2025, that number is roughly $595,000. For the 6 months ended March of 2025, that number is close to $1.3 million. This is the main reason they are not in the red. For the 3 months ended March of 2025, they had a net income of roughly $408,000. But for the 3 months ended March of 2024, they lost $27,000. Over the 6 month window, they have a net income of $950,000 compared to a loss of almost $84,000 in the year prior. They lucked out on their investments for this period, or they would be going down the drain and $50,000 compared to a loss of almost $84,000 in the year prior. They lucked out on their investments for this period, or they would be going down the drain. Now let's check out their statements of cash flows. This tells us where their cash is coming from and going to, which is a reality check against those accounting numbers. Net cash used in operating activities shows how much cash the company is burning just to stay afloat. For the 6 months ended March of 2025, they burned over $315,000. At this rate, they are on the clock for when their cash will run out. The bottom line is that they ended up with $354,000 in cash. This is compared to ending up with roughly $36,000 the year prior, so they are doing okay in that regard. Now let's take a look at note 1 in the report about the going concern consideration. This is a fancy way of saying, can this company actually stay in business? The report literally says that the mandatory liquidation and the need for more money raise substantial doubt about the company's ability to continue. So this company itself is admitting that it might not be able to survive. I would call that a huge red flag. The report also points out risks and uncertainties stemming from global events. Things like the Russia-Ukraine conflict and the Hamas-Israel situation are messing with their ability to do business, especially when it comes to raising money. They were paying roughly $10,000 per month for things like office space, utilities, and admin support. On March 20 of 2025, the sponsor issued a share purchase option to one of the directors of the company, Mr. Johnson. They are also beholden to the underwriters that help them go public doubly. Now, let's step back and take a look at the big picture. Eureka Accession Corp is basically racing against the clock. They are burning through cash, and if they can't find a good match for a business merger, soon they might have to shut down and return the money. The dependence on interest income to stay afloat, coupled with rising expenses, is a shaky foundation. On the plus side, they've managed to keep a decent amount of cash in the trust account, and they're actively looking for opportunities. However, the global risks and their own admission of potential failure make this a risky bet. What's your take on Eureka Accession Corp? Do you think they can pull off a successful merger, or is this a ticking time bomb? Drop your predictions in the comments. If you found this breakdown helpful, give that like button a tap and subscribe for more corporate deep dives. Also, don't forget to check out our Discord channel in the description. Thanks for watching, and I'll catch you in the next video.